Hey guys, it's Carter. Welcome back to the channel. Now in today's video, we are going to be talking about the top 5 things all traders need to become profitable. I think we all have heard the statistic of 85% of traders out there are unprofitable and losing money. So these 5 things will help separate you from those who are profitable and those who aren't. So I hope you guys all enjoyed this. And if you guys are watching and you're like, who's this random guy in a Spider-Man shirt? My name is Carter. I'm a full-time swing trader in the stock market, and I have been for over 6 years. And with that being said, we do have an amazing school, amazing community of people that I teach on how to trade stocks. It's an 8-week course. We have private live streams, quizzes, lectures, everything you guys need to get started with trading, whether you're a beginner or you're a veteran trader just wanting to learn more. The great thing about my approach is, 1, I don't believe in alerts. I teach you how to find stocks. 2, I understand this is not a get-rich-quick scheme. I understand that. And you have to have that approach when navigating trading in the market. I am not somebody that's going to turn $100 into $100 million in 30 days. I'm not that trader. I'm the type of trader that takes profit at 1 to 3% returns that just compound over the course of a year. That's what makes up a successful trader in my eyes. It's not about these crazy returns. It's about base hits and consistency. So guys, make sure you guys check that out down below, and you guys can get 50% off by using code LEARN. Code LEARN. 50% off. So guys, let's jump into this here. So the first thing that you guys will need is a well-defined trading plan. So a solid plan helps traders maintain discipline, avoid emotional decisions. It includes a set list of criteria for trade setups, risk management, and profit targets. What I always recommend doing is just having a checklist. So what I look for: stock on an upward trend, on a support, maybe on a moving average line. What's the RSI? When was the more recent earnings reports? What's the risk and reward? Is it a 1, 2 to 1, 3 to 1, 4 to 1 risk and reward? And is there any lower time frame supports or breakouts? Having a set list of criteria or plan is a great way to always choose quality over quantity, and something that I would really just recommend implementing. Like I said, 85% of traders fail, but on the flip side, 85% of businesses fail. Those businesses lack a trading plan. Or a business plan, excuse me. So it makes sense that 85% of traders lose money because they don't have a plan. Nowadays, brokers make it super easy to open an account and start trading, when in reality, it's better to just start slow. Paper trade. Learn as much as you can. Paper trade. Then start small with $100, $200, and just build up that trading plan, and then slowly add money into it. Now, I always have the approach of 2 years, and I think that's a very realistic approach. So, 2 years out from pretty much making money from trading. I know that sounds crazy, but you have to have that approach of like a doctor, an engineer. It takes years of practice, education, hard work in order to be successful. So make sure you guys just take those extra steps. You won't regret it. Now, the next thing that you guys will need is a broker. So a broker is how us as traders have access to the stock market. Now, I'm sure you heard me mention paper trading. So paper trading uses simulated money to practice your entries, your exits, and your risk management skills. Now, the reason why this is important is because there's a lot of brokers out there that don't offer paper trading, and there's some that do. The broker I would recommend using is Moomoo. They're absolutely fantastic. I'll put them down below. You guys can get up to 20 free stocks by signing up. But why I love having a trading broker is because that broker is designed for trading. So it offers really good technical analysis skills. It has a Facebook for traders. So if you do have questions, you can ask there. It's all commission free. But more importantly, what it doesn't have is something called order flow. So companies like Robinhood and a lot of other brokers out there, they make money off of order flow. So if you buy a stock that's just say at $1, they'll send that order to the exchange for, let's just say, 98 cents. Now you bought the stock for $1, they bought it for 98 cents. So that 2 cent window is where Robinhood makes money. Multiply that out by millions of shares and millions of consumers. It's a lot of money. But the great thing about having a broker like Moomoo is they don't do that. They send the order right to the exchange themselves, which us as traders pretty much guarantees us of getting the best available price, which is always good. So make sure you guys choose a broker that meets your needs. I use Moomoo. I love them, but there's a lot of other really great brokers out there that are just as good. So the next thing here is a lot of reading, but this is having a good risk management strategy. So what this entails isn't making money. A lot of people have the misconception of risk management of making money, when in reality, risk management isn't making money. It's actually preserving money. So here's some things that you guys can do is setting a stop loss. Setting a stop loss is super important because it'll automatically exit a trade when a stock reaches a predetermined price. So it will limit your losses. This will help prevent emotional decision making, protects you against large and unexpected losses. Another thing you guys can do is just have good position sizing. Many traders use the rule of 1 to 2%, meaning they only risk 1 to 2% of their total account on a single trade. That's a pretty standard thing a lot of traders do, but you'll also see a lot of smaller traders, maybe traders with, a little amount of money, try to leverage their account, which I get, to try to build it up quicker. But if you focus on just like the long-term aspect of trading, you'll be in a great spot if you start implementing these rules at, I don't want to say a young age, but as a beginner trader. The last thing that I would highly recommend doing is just having a good risk and reward. And what this means is when you take a trade, you're risking $1 to make $2 or $3. So a good risk and reward pretty much ensures that the reward is higher than the risk, which allows you to maintain profitability even if you lose more trades than you win. So a lot of people think that trading's 50-50, right? Either you buy a stock, you buy a stock and it goes up, or it goes down, right? 50-50 chance. But when in reality, if you're taking trades and let's just say the risk and reward is 5 to 1. So you're risking $1 to make $5 on every single trade. You can be wrong 4 times and still make money on a trade, which is astonishing. So have a good risk and reward. The great thing about Moomoo is they offer the risk and reward calculator right in their charting, which makes it super easy. For those of you that watch the videos, you guys know what I mean. The next thing here that I would recommend having is emotional control. This is built up over time. And what and why this is important is emotional trading can lead to impulsive decisions, causing a big loss. Successful traders remain calm and focused even in volatile markets. The biggest thing is just try to be stone cold, right? Whether you're up a lot or you're down a lot, you got to be stone cold. Have the rule of threes. So if you make 3 profitable trades, take a step back, review your trades. If you take 3 losses, take a step back, look at what went wrong. Doing this will help maintain emotional control, as well as just sticking to your trading plan, and this is built up over time. This is why a lot of traders lose money. I personally would, if I was gonna give a percentage, I would say 80% of trading is emotional control. When you lose money, the first instinct you have is, how can I get that money back? And when in reality, what you should do is, okay, what went wrong? How can I implement that for future trades? Look at every loss as lessons, and you'll be in a great spot. So the rule of threes and just stone cold, and you'll be in a great spot. The next thing here is just evaluate your performance. The biggest thing that I do that I think a lot of traders don't do is have one of these. This is a trading journal. This is the one that I sell, the one that I recommend. I sell this right on Amazon, and I absolutely love it. Now, you don't need that. You don't. You can use a handy dandy 99-cent journal from the dollar store. It does just fine. But keeping track of your trades will help evaluate each trades and pretty much look at what works, what doesn't, so you can continue for improvement. I've been swing trading for over 6 years, and I continue to think of myself as a student. The second I think I know everything about the market, that's the second the market will take something from you. So continue to look at your losses as lessons and your profits as lessons. Look at everything as lessons. Continue to be a student. Document everything so you can look back at what went wrong, what went right. And I'll put these all down below so you guys can sign up. But guys, that is it. These are the top 5 things you guys need if you want to be profitable as a trader in the stock market. Don't forget, you guys can use code LEARN to get 50% off. So I'll see you guys in there. Hope you guys all enjoyed it. Like, subscribe, and we'll see you guys in the next one. Take care.